This one is the hardest. It's gonna cost you the most money, it's gonna take the most time, but it is my personal favorite. Here we have a $180,000 house. Yes, these houses are on the market like you see here with this 3-bedroom, 2-bath house in a nice suburb of Michigan. The way real estate investing works for cash flow is you're gonna go out and buy this house not to live in yourself, but instead you're gonna rent it out to this nice family right here. So they're gonna move into this house and now they're going to pay you rent in exchange for living in this house. And let's assume, because this is a nice house, that they're going to pay you $1,900 a month in rent. Yes, this is possible. Just go back to the Zillow listing and you'll see that the $180,000 house has a Z estimate of $1,957 a month in rent. That adds up to $22,800 a year in revenue, which is a lot of money, but it's not all yours, because now that you own this property, you also have to pay for the expenses. You have to pay for the property taxes, you have to pay for the insurance, you have to pay for the maintenance, you have to pay for the management fees, because you're an investor. You don't want to be managing the property and cleaning the toilets and doing all of that. And then you have to pay for the vacancy, because there's also going to be times where the tenants move out and you're not generating any rental income. Now, if we do some rough math, if 50% of your revenue goes to expenses, that means you will be left with around $11,400 at the end of the year in profit. Now you might say, well, that all sounds good, Jaspreet, but I don't have $200,000 to go out and buy this property. Well, you don't have to go out and buy this property all cash, because there are alternative ways for you to get started in real estate with less work. Take a look. When you buy a house to live in yourself, it is called a primary residence. And as a licensed attorney who is not your attorney, I can tell you that a primary residence has a little bit of a unique definition. A primary residence could be a condo, it could be a townhouse, it could be a single family house, it could be a duplex, it could be a triplex, or your primary residence could be a 4-unit building, which means you can go to the bank to get a mortgage, not just for a condo or a townhouse or a single family house, but you can also get a mortgage to live in for yourself for a 2-unit property, a 3-unit building, or a 4-unit building. And now you can live in this unit and rent out the other units to your neighbors, who will now pay for your mortgage for you. Take a look. Let's assume that you can buy this 4-unit building for $600,000. Yes, these types of units still exist. Take a look at this 4-unit building in a nice suburb of Michigan for less than $400,000 for sale, and these units are already rented out. But this is where things get interesting, because now you can get a mortgage to go out and buy this $600,000 building. It's a 4-unit building. You can live in this unit right here, and now you can rent out the other 3 units. And let's assume that you can rent out the other 3 units for $1,300 a piece for 1, 2, and 3 units. Now you have a mortgage, but your costs are going to be subsidized through the help of your nice neighbors. That means your neighbors are gonna pay you $46,800 a month, but again, you have property expenses. You have to pay for your property taxes, you have to pay for your insurance, you have to pay for your maintenance, you have to pay for the management fee, although yes, you could manage these units, but you still wanna factor in a cost for that management fee, and then you have to factor in the vacancy cost, because people will move out at some point. So let's assume again that about half of your revenue is going to be expenses. That means you're gonna be left with around $23,400 a year after paying for your expenses, but you still got your mortgage. And if you go out and you put 20% down, you put $120,000 down on this property, you finance the other $480,000 at 6.5% for 30 years, well, that means your monthly mortgage payment is going to be $3,000 a month or $36,000 a year, which means you take this money, this $23,000, and you apply it to the $36,000, and that means your monthly payment out of pocket to live in this property is going to be around $1,000 a month, which means your mortgage payment to live in the property is less than your neighbor's rent. And this is where things get interesting, because when you buy this primary residence, you have to live there. But the question is, how long? Well, what most mortgage contacts will tell you is that you have to live in this property or have the intention to live in this property for at least a year and a day. So you live in this property for a year and a day, and now you move out. And then you rent this unit out for $1,300, just like all the other units. Now you own this property, you have your primary mortgage on it, because now you have a lower mortgage rate, because mortgages for your primary house is cheaper than an investment loan mortgage. And now you're making that additional $1,300 a month, which means you're profiting $300 a month on this property. And I can go buy another 4-unit property and do it again and again and again, as a way to start building your real estate investment portfolio. This is a much more accessible way that people that are flexible can go out and start building the real estate investment portfolio without going out and buying other properties. You can use your primary residence as a tool to start building your portfolio. Not to mention that if you buy this property in a good area, in a couple of years, you might be charging $1,400 a month for each unit, maybe even $1,500 a month for each unit, which means you get to make more money because of the investment that you purchased. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.